Everybody. For some reason, I really thought it was Wednesday. Getting ahead in my week already. Maybe yesterday was just such a long day that it felt like 2 days. We did have a really nice setup though yesterday. That break to the downside of that wedge was really nice. Just a moment. I have to. I always got to go in and adjust all these settings. All right. So this morning briefing is designed to help you kind of get ahead of the day, think ahead about what we have on the docket, what could change the structure or the sentiment within the market. One of those places that I like to go to is Finance Juice. You don't need to have an account here, but it helps so that you can filter out the names of the news agencies that you don't want to see. This is usually my go-to for this market wrap. Kind of get an idea of what happened in the overnight hours, what was going on in Asia, how are things going right now in Europe. A lot of times, whatever sector is doing good in the overnight hours, it will uh, you will get that contagion and bleed over into our day. So Finance Juice, this gets it done. You could also perhaps look at something like FX Street, which they do a little bit of an excerpt on the dollar, and I've found that keeping track of what's going on in the dollar is not always an easy thing. Sometimes we want a strong dollar, sometimes we don't. And so when we can get some background on what's going on in the dollar, it kind of helps out a little bit in that macro picture. So, Finance Juice is a good one. FX Street. Bloomberg sends out a free email every morning called 5 Things You Need to Know. And even if you don't have a Bloomberg account, you can sign up and get that. Most of the time, I find that there's nothing really in there that I didn't already know, but sometimes I get surprised. And then they have a nice little editorial down at the bottom, which often is ahead of where the market goes. I found it to be insightful. So definitely want to swing by Bloomberg and sign up for that 5 Things You Need to Know. I mean, it's free and it's good. Right? I mean, you get what you pay for. I did have somebody ask yesterday, if money was not an issue, what would be the best product out there? And that would be Hammerstone. It's crazy expensive. You're looking at like 300, 350 a month, but you get what you pay for. When it comes to Hammerstone, you have probably seen it and you didn't even know it. And that's because it's on Thinkorswim as well. So if you are looking at Trade Flash, this is a byproduct of Hammerstone. It's the free version. All right, so what do we have on the books today? We have the 5-year note at 1 o'clock. That's a big one for me. 11 o'clock, the 4-week bill announcement. Yeah, I mean, I'll definitely be keeping an eye out at 11, but it's the 5-year that has captured my imagination today, and it's definitely where I'm going to be planning my afternoon. Keep in mind, guys, that this week is predicated on don't rock the boat. Hold the line until we get the economic data. So the markets should not break out. They should not break down. They should just maintain the range. And I'm not saying that we can't break down or break out, just that they're going to do everything they can to maintain the range, keep the status quo till we get econ, right? So Operation Don't Rock the Boat. Companies like Walmart is making that a little difficult, perhaps. All right, so we're looking at the S&P futures on a daily chart, and you can see that we're still just maintaining within the weekly expected move. We're getting, if we were to do OCR analysis, higher lows and lower highs, and we are winding into a compression box. There's no directional implication here, just the energy. The longer that we compress, the more energy we're building up, winding up more and more and more energy. One more day. We'll get the Fed announcement tomorrow. That will be the next, well, it'll be the last one until September. And it's not necessarily how much they're going to raise rates tomorrow. It's what they're going to say after that. What kind of data are they going to look at for September? What is going to be their number one guidance? Money velocity has dropped to this crazy extreme low. And, that's going to need to be resolved too. There's just so many things on the docket. I will continue to stress there should be a little bit of you trying to be a contrarian as much as you can. You got to be able to sustain a long while it's still going down. Everybody out there is saying how bad it is and how bad it is and how bad it is. Whirlpool missed yesterday and ended up 2%. It missed because of Russia, when it pulled out of Russia and abandoned its facilities there. Interesting what we're going to see with Starbucks, Pepsi, take it on down the list, right? McDonald's. All right, so what's our expectation for today? We can maintain the range, holding within our own Globex. We could break that range and have an inside day breakout to the upside and or an inside day breakout to the downside. For our range case for the day, kind of approach it in quadrants or zones. So for an example, the low of yesterday to the Globex open last night, that would be one zone or one quadrant. Then from that to say where we opened in the RTH yesterday, that would be a second quadrant. And then from that open in the RTH all the way up to yesterday's high, that'd be a third quadrant. It would still all be an inside day. We would just break those down into more manageable, tradable opportunities. That's our base case, by the way, right now, that we're going to maintain the range. So if we don't do that, we really got to approach the question, if we're not going to maintain the range, what else can we do? We can do a top side breakout, a bottom side breakout. If we were to break to the downside, we have the weekly expected move, the weekly pivot, just a regular plain old floor pivot. Right now we have a MDP. We are underneath the daily floor pivot. We haven't touched it yet, so it's a missed daily pivot, MDP. The ADR is back below 2%. It's been a while since we've been there. So volatility in the market, looking at what the market makers are doing, they're knocking that volatility down. We're seeing a lack of express movement from close to close. It's just luring everybody in, winding everything up more and more. And think about where all of the orders are piling up, right? On the edges, on the outsides. So with that break to the downside, break through yesterday's low, 39.46. The weekly pivot, 39.33. Half the ADR, 39.22. And a full ADR at 38.83. There's really not a lot that we can mark up in that zone. Between half the ADR and the full ADR. There is a cog line there, 39.11. We got the round number, 3,900, but other than that, there's really not a lot there. Take it over to the volume profile and the TPO. So again, if we break down below yesterday's range, we got a shallow area that we'll move through relatively easy. Pivot minor around 38.80. And some relatively decent volume nodes at 38.50, which would be pretty close to the value area low. The size of the volume profile has compressed significantly, and it's going to get smaller as we get closer to tomorrow. So we're just winding up, right? Smaller and smaller range, building more and more volumes right at these levels. All right, so here we've got a 5-day, 5-minute chart. Really kind of highlights yesterday's compressed market. And there's really the value area high and the value area low can be carried forward, but there's really no reason to carry forward that point of control. We've already crossed through it a couple times. There is still an untouched point of control to the upside. Call it 39.96. That's very likely going to be our day, guys. So someone was asking about energy, and when it comes to options, we don't necessarily have to trade direction, right? Which is pretty cool. So we can just take a trade and let time go by, and we can make money based on that. But there's a difference between energy and volatility. So generally speaking, when we're talking about the sell side of things, we want to sell to open things that are plump or overly inflated in their cost at the particular time, in the expectation that it's going to decay relatively quickly, and we make money from that. But energy and volatility are two different things. We really started getting into energy in the market, and that was a word that hadn't really run across a lot. It's not the word that you hear most of the time. Usually it's volatility or inertia or momentum. It's those kind of words. And then they came out with this fractal RSI, or this fractal Laguerre. And the way that this thing reads, if we turn off the blue line, which happens to be the RSI side of things, and we look at only this orange line, think of that orange line as a fuel gauge for how much energy does this market have. Now, every market is different, right? We could expect to say USO to have a different energy than NIO. But with having that said, generally speaking, when we get above, say, 60, then we say that we have a full tank. This thing is fully loaded. It has a lot of energy and it could make a move with that energy. Now, think about taking a ball and throwing a ball to somebody. You took energy and put it behind that ball, and the thrust of your energy propelled that ball, and it will slowly lose its energy in the move. And if nobody's there to catch it, it's going to hit the ground. You take that same ball and you drop it off the top of an Empire State Building, and as it falls, it's picking up speed. So there's two different kinds of movement, right, when it comes to energy and when it comes to a market. So with an indicator like this, we can honestly ask a question that we didn't used to be able to ask. Is this move being done with energy behind it, like somebody throwing a ball? Or is this move being made to gain energy, like dropping a ball off of a building would pick up speed and pick up energy as it fell? So that when we're looking at a market come into, say, a resistance zone, and we recognize that the energy is very close to the low side of things, you get that expectation of, do we have enough energy left to break through this resistance? Uh, I really like the idea of being able to gauge a move and look at the move with that question in mind. Is this a move done with energy behind it? Meaning I wouldn't want to stand in front of it and get ran over. Or is this a move that is happening to gain energy? Because once it has gained that energy, what's it going to do with it? So this is called the RSI Laguerre. There's been a couple of books on it. Doc Severson has wrote a couple books. I think they were doing some videos on YouTube for free too. It's a free indicator, so there's absolutely nothing wrong with if you've got Thinkorswim, loading it up and perhaps checking it out. I just shared it in the chat. It is a different kind of indicator. We've never really used that language before, energy. So I found it insightful. I don't trade with indicators, but I do use indicators to measure things and quantify things. And this gives me a way to put a number on it, so that one thing we learned along the way, when does a market gain energy? Well, if it's going sideways, consolidating, it's building energy. And that may be like a Captain Obvious moment, and like, thanks, dun 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 dun. But the way we used to approach it was like that it was a squeeze, or that we needed those offside liquidity issues, so that when we rated into that liquidity, we would get that, catch those traders off sides and really get that propelled move in the market. That's the way we used to kind of approach it. Now it's more of an idea that when a market is consolidating, very often it's winding up energy. It's building up energy to make a move. And I'm old, so I remember those toys that we used to have where you would wind it up, had the little handle on it, and you'd wind it and wind it and wind it and give it energy, and then you'd set it down and it would do whatever it wanted to do. So think about price the same way. When we are tightly wound, tightly consolidated, and just sitting there grinding in a very small range, we're building up more and more and more energy. And that RSI Laguerre polynomial, it actually is rocket science, which is kind of funny, but it's fractal in nature. So you can use it in multiple time frame analysis too, from top-down approach all the way out to the monthly if you wanted to. I believe it also works on a tick chart, which is cool because a lot of our indicators don't cross over into tick. Yeah, see, it works on a tick chart too. So I always hate talking indicators because I don't want someone to mistake me and think that this is going to solve some problem in their trading issues, or it's just a measure, right? When you go to the garage and you get a tape measure out, it's just a tool to help you measure something. It's all earnings today, guys. Earnings and econ. It's Operation Don't Rock the Boat. So we're going to continue to expect to see this market do as little as possible, as much as they can, and it's all waiting on FOMC. And keep in mind with these lowered volumes that the potential for very violent, very large moves goes up. I know that may not make a lot of sense for newer traders, but if there's low volume, then it doesn't take a very large order to move price very far. When it comes to taking a vacation or calling a timeout, this is one of the best weeks to do that. You know, come back after the earnings, after FOMC. Basically, just come back next Monday. You'll be rested, refreshed, ready to go, and I promise you won't have missed anything. All right, so as we were talking about, the volumes are really low. It's getting a little bit extreme out there. This indicator is just counting up how much volume we had in the overnight hours. It's just a way to kind of gauge. Now, keep in mind, it's 10 till 8, so we've still got another hour and a half. But you know, how much more volume are we going to get in an hour and a half compared to what we've been getting on a day-to-day basis? It's worth taking a look at what we had yesterday. I think this is going to help you guys understand what you're likely to get again today. The ticks were doing relatively well. I mean, we were crossing over into the red a little bit, but mostly through the morning session, we were dominantly in the green, and we had those relatively strong pushes above 750. But we just had a market that kept stalling out, right? And every time we got near those highs, all of the breath was cutting off, and there was just nothing there, right? So it's going to be the same thing today. You can see how we topped out in the cumulative tick yesterday. A whole lot of sideways action. We didn't really get anywhere out of all that running around, very much like a hamster on a wheel. A lot of running, a lot of moving, just to end right back where we started. So the advanced decline, the cumulative tick, the tick, uh, even looking at things like the financials, XLF, and looking at tech, NY It's just a sideways market, no real big breakouts, just maintaining status quo. It's exactly what we're going to be expecting today. Now, it doesn't mean that you can't find anything to trade, but if 8 out of 10 markets are going to do what the S&P is going to do, then you really want to diversify your selection process. Maybe go to bonds or commodities, right? Go to pot stocks, or something that has an inverse relationship to the S&P, or at least has a negative beta. Right, Tesla failed to get through that gap yesterday. We're going to be focused on something like a hold pattern. It's a think or swim thing. If you've watched, say, those Connie Hill from TD Ameritrade talks about holds frequently. Or maybe not. So with Tesla here, if you're looking for an opportunity, keep in mind FOMC is still dominant. All of the econ is still dominant. This is no longer a red to green play the way that we were talking about it yesterday. It's the second red day now. It doesn't mean that we can't go up or we can't rally, but as a trade strategy, when we're focused on R2G, it's supposed to be the first red day. So, subsequent days don't fit the profile for the strategy. We had a TRB in NVIDIA yesterday, and there was some news. They got a downgrade from some of the big banks yesterday. And even after that downgrade, they actually were doing pretty good. That, I mean, we say pretty good. It didn't dump, right? Let's say it that way. And it should always stand out if you see that. You see some big name banks downgrade a well known company and it doesn't dump. That's pretty impressive, right? It doesn't happen a lot. It should get your attention. I don't know what you want to do with it necessarily with FOMC and everything else, but it stands out, right? It should stand out and get your attention. So we did get that TRB break. We may get an opportunity today, for an opportunity. We're just talking day trade stuff, right? There's really no swing on the table until resolve FOMC. But if we can break below 166.5 or 160 yesterday's low, then the target will be back to 159.5, right? So not a bad move. Basically the same setup in Apple or in Microsoft. Round number 257. If we break below that, we'll aim for 253.5. Now, if we continue to focus on Operation Don't Rock the Boat and we think about how that might play out, one of the things that I like to see is when we come into the open, if we are down underneath some minor pivots and we're at the low of the range, that either we open, drop down and tag and then make that move to the upside, we start working through our pivots, or we open, spike to the upside and hit that pivot minor and then towards the lows. We have every indication that we're just going to continue to hold the line. With that Walmart miss, look for a sympathy play in something like Amazon, right? This thing took a significant beat down just in sympathy with Walmart, but mean reversion and linear regression says that this could pop back up towards that 121. If you look at where we were at in the overnight hours, that 117, it's Amazon all the way back down to this pivot minor here. That's where we're going to be opening up this morning. So with that in mind, if it starts to rally just because of how the sympathy play worked, then we just want to target the close of yesterday, the low of yesterday, and then the close of yesterday, right? That's going to be our focus. If it doesn't hold and doesn't catch, then we'll focus on playing it to the downside, probably that 114. Small caps continue to come back into the spotlight. So it's something to definitely be aware of. It's not my day to stream at the Bullish Bears, but I believe Jeremy will be in the futures. Let me check the schedule and see. Yeah. So Jeremy will be in streaming in the futures today, starting at around 9, maybe 9:15. That's what I got for you guys. Be careful, be safe. Keep in mind the setup. We had one really good trade yesterday in the S&P. At least, the one that I thought was a good play. It took all day to get the darn thing, but it finally came around. It was worth it, right? Have the patience. And then, of course, I didn't get it. I was out in the garage putting the sissy bars on my bike, and I missed it. But that breakdown and that move into the afternoon, it was worth waiting for. Right? It was a really good play. So be patient. If there's no opportunity, let it go. Right? It's not worth it. You'll get a better one. It's better to take a high quality trade than it is to take a bunch of little not so great trades that wear down your mental capital and your mental or your actual capital. I'll see you guys tomorrow. Yeah, I've certainly been there. The I've had new traders that reach out and say, "Oh, I don't know what to do with it. I bought this thing and now it ripped to the moon." And I'm happy for them. I mean, like, you randomly buy some junk, which is what new traders usually trade is junk, and then it spikes and rips all the way to the moon, and they're like freaking out. It's a good thing though, to help others. I get a lot out of it. That's why I continue to do this.